All right, we are officially on. Good evening, everyone. Ava Sansam is back with you again this evening for the third installment of Laja Lakai, which is our contribution to the community, focusing specifically on wealth and wealth building. Many of us are either first generation immigrants or first generation having access to what quite possibly is the semblance of wealth or definitely disposable income. But unfortunately, it didn't come with instructions. It didn't come with tools a lot of times. We don't teach credit and we don't teach money management per se in our lower division schools. And we wanted to be a part of the solution in our community. So we are deliberate about sharing information wide with as many people in our community as possible. Because as we make solid financial decisions, we want to make sure that we're making, how about that, making solid financial decisions. So this wealth building series, this is part 3. And tonight we're going to tackle a topic that I am very interested in, and I imagine that you yourselves are going to be very interested in. And we've brought in experts in order to do that because Ava Sansam wants us to move forward together, which is the literal translation of Ava Sansam. And in order to do that, we want to make sure that you have access to the absolute best information. Oh, and tonight I'm wearing my Ava Sansam t-shirt. This is our logo. If you are considering or thinking about, if you love what you're hearing from Ava Sansam throughout this series and throughout a lot of the other things that we're doing on Facebook and various platforms, please reach out to us. Membership is open right now, so please definitely reach out to us and be a part of this partnership. So with that, I want to talk a little bit about where we are with credit. So Carl and I, Carl is our special guest from the Oasis firm, a credit consultant firm, and he and I had a real great conversation just around a lot of the challenges that we all share and what is similar for a lot of us concerning credit and credit topics. So I want to introduce Carl Sirius to all of us. And Carl, if you can tell us just a little bit about yourself, maybe even share a little bit of your credit journey and what brought you to this particular line of work at this point.
Definitely. Thank you so much for having me on the platform, Amara. I'm really excited to be here. Seeing the slogan, all things Haitian, it definitely resonated with me. I'm sure people who hear it in my accent. I'm Haitian, born and raised. Make sure I always say born and raised because I'm very proud to be Haitian. As far as how did I get here in a journey, one thing I can mention as far as like getting to the line of work, it was even way before that. I could say that I got introduced to credit in a sense, and it did not resonate with me until a little bit later year and life. When you think about it, I got into the business because I needed it for myself. To be frankly speaking, I had a property out, a rental property out in North Carolina. I was in the military. And when it was time to actually live over there, I didn't want to sell it. I just wanted to turn it into like an income producing property. However, to management, it wasn't the best choice to have happening. And I had some tenants that sort of messed things up. And it was just kind of putting me far behind. And I ended up just wanting to negotiate with the bank to do a deed in lieu, which you might be familiar with being a realtor. And they agreed that they would take the deed back from me and erase even the deficiency difference, and I would have to be on a hook for it. But that was all talk because when everything was final, they actually doubled the difference for attorney fees, quote unquote, and they put it on my credit, and that's when my credit went from the high 700 to the mid 500. And I just thought to myself, you know what? Let me give it a go, see if I could fix that myself. It took me quite a while to study. I said about 3 weeks consistently studying I had a 9 to 5 regular working type of civilian. And I went into it and fixed my credit myself. And I was like, you know what? That would be a great business to keep me, you know, help me go into journey of entrepreneurship. And since then, I never looked back. I've helped, countless people repair the credit. But a lot of times when people ask about credit, they always kind of start want to dive into Experian, TransUnion, and Equifax because those are the big threes that people are familiar with. However, there's a lot of them out there, but the concept itself is not anything new because when you think about it, a very famous phrase in Haiti is like "Mpa acheter crédit," which I believe is a lie. You actually find out that people bought on credit. Well, like you say, for the
translate it for us because we have our various community here. What does it mean?
So "Mpa acheter crédit" literally mean I do not buy on credit. And usually when you hear Haitians say that, they will say it with pride. Because simply, you know, you don't want to owe anybody. You don't want to have debt that are outstanding and people are saying anything, you know, that's not, I would say, aligned with your reputation. But the truth is, we do buy on credit when it comes in Haiti. Because if you're trying to buy a land, it's you think about your grandfather. It's not like your grandfather is going around and strolling with, you know, 50 goats, you know, 3 cows and 4 horses, you know, just to say, hey, I want to buy your land and this is the equivalent for it. They negotiate and they know your reputation. And what brought me to think even about Haiti is I remember as a child, I was walking from my friend's house, going home for lunch. It was pretty hot in the summer and I was sweating. And this lady called me over and she was like, hey, you know, just go ahead and grab something. I see you could use it. I was like, no, I don't want to do that. I don't have any money. And she's like, well, you can do it anyways. And I'm like, well, mpa acheter crédit, you know, because that's what you learn coming from your parents. And she was like, you find your parents will actually go for it. And she told me, you know what, listen, it's fine. I get compensated by your parents. I know where you live. I know your name. I mean, I even remember being there when you was born and I know where your parents work. And when you look back on it now, it's the same question they ask you on the application when you apply for credit. So ultimately, what credit is a reflection of your character. If you're doing good business, you have credit. And I'm sure there's some people, I mean, at least you have credit with your mom and your parents. That's something I would say.
At the very least, I love that. I love that example because it breaks down in just the simplest terms of it's about reputation. And sometimes, you know, we've made, you know, some choices or some mistakes throughout the process, and our reputation may be a little bit tarnished. But your credit is your reputation. It's unlike when we lived in smaller communities, whether back home or even in the States when we lived in smaller communities. And I know your people essentially is what she said to you. I know your people, so I know that you're good for it. I know how to find you. I know who you are. And it's so interesting to understand that that's basically all our credit is. It's the bank does not know me, but my credit says this is what my reputation has been. I borrow and I pay. So I really love that particular explanation on it. I can remember starting off as a young college student, and I've shared this story. I think I shared this story the first week of our 3-part series. But I remember being on campus and being offered credit cards. You know, they set up the tables and they're giving away the newspapers and the pizza and whichever. And we, you know, being college students, free stuff sounds great. No one really explained what it all means. And that was my introduction to credit. My first credit card as a college student, I want to say I was a freshman. They gave me $500, which was a lot of money to me, and said, hey, you can always just pay the minimum, which sounded great. That sounded like an incredible concept of give me 500 and every once in a while, every month pay $25. I'll get that paid off in no time. No one explained everything else that comes with and as a result, between that bad decision and other bad decisions with not knowing enough, at some point my credit was in the 500s, which you can, if I had to live on credit, I absolutely would not have survived. So with that, what has been your experience with, whether your clients or whether even younger people, what has been your experience with how many of us come to credit? Are people making credit decisions with information? Being that this is your realm and you speak to people about this kind of sensitive subject all the time.
Yes, I would say people do make certain decision about credit and trying to think about it even logical, but there are a lot of things that are not so logical. To be honest with you, a lot of things don't make sense, and you just have to be somewhat initiated, and or I would say be very into the business to sort of know about it. That's one business model as far as like on the bike side of it. That that's an industry you will never really see being disrupted simply because of how it is set up. People that comes to me making decision credit, one of them that they will make and that they will think is very logical and it really doesn't make sense is when they say, hey, I remember owing that money and they're coming for collection, I just have forgot about it, so let me go ahead and pay that debt and my credit would be where it needs to be. Now, here's the issue with that. Technically, the only obligation that the credit bureau, the creditors, and merchant have is to report accurately. So when you actually pay that debt, the only thing they have to put is that you paid that debt and whatever the balance was, they put it down to zero. Not the fact that particular trade line account on your credit came as a collection, inherently it is a negative item. So it doesn't matter even if you pay, you don't owe any money, it'll leave a tarnish on your credit report and it will stay for about 7 years, 10 years, depending on what it is. And really sometimes the best thing that you can do, and this is a free nugget right here, if you recognize a debt and you feel like, okay, I'm just going to own up to it and pay it, at least pick up the phone, call the creditor and say, hey, I would like to know if you do pay for delete. And what that is them agreeing when you pay, they will actually remove it off your credit report. If you don't do that, it's very likely that you'll pay it and they just keep it on your credit report because the only obligation is to just report accurate information. And if they're updated to say it's paid, it's considered accurate. So that's a mistake to not make.
So pay for delete is a thing. As a condition to for me to pay off this debt, I'd like to also have it deleted.
Yes.
That is actually that's definitely a nugget. If you're taking notes anywhere, whether on our Facebook or in our Zoom, that definitely is a nugget because I hadn't heard of that necessarily being an option. Let me ask you. I'm going to backtrack just a little bit. What goes into a credit score when we look at any of the three major or whichever? When someone is pulling my credit in my industry, because I'm in real estate, people are having their credits pulled all the time. Nadia on our Zoom right now is a mortgage broker, so we're dealing with credit all the time, and we know the weight of credit scoring. But what goes into a credit score?
Okay, so gotta think about 5 factors, and that's like general rule of thumb. It's 5 factors. Uh, the first one being payment history. That accounts for about 35% of your score. And just to backtrack a little bit, your score, like let's talk in just the overall, I will say, credit that score that they use for you to qualify for a home, because they have specific product directed at you getting a credit card, even auto insurance. It goes really deep in the credit world. So let's just talk about what people mostly know about. That score goes from 300 to 850. So right then and there's a spread of about 550 points. Well, exactly 550 points that you can maximize on. Now, when you think about the 5 factors, the first one being payment history, that account for 35% of your score. So if you always pay on time, you never have a late payment, automatically that's about 192 points that you're going to see on your credit score. So now you're basically adding 192 points to 300. So right there, that already puts you at 492.
Mm.
The second factor is, besides payment history, is credit utilization. That account for about 30%. So right then and there, you kind of sort of realize those are the major bulk. If you kind of get those 2 things in there, you'll be somewhere about decent. And after that, the other factors are credit mix, how recently you ask for credit and how often. Certain companies will penalize you or tell you that you do not meet, I would say, the criteria because you apply for credit for 5 times within the last 24 months. So that's something to be mindful of. And the other thing is also new credit. And new credit, as well as credit mix, those account for 10%.
When you say credit mix, can you elaborate on what that means?
Yes, there's different type of credit you can have. There are 3 types mainly. Any situation that you think about, they fall within the 3 types. You have revolving credit, you have open credit, and you have installment credit. Revolving credit, you're talking about your credit card. Basically, an easy way to think about it is a debt that you can let revolve month to month, and you don't have to pay it all. So your credit card right now, like you say, you could swipe it, max it out, and you just got to pay the minimum balance and let the rest just kind of revolve around, which is not a good idea, by the way, but just to explain it. Installment credit. Now we're talking your car note, your mortgage. That's an installment credit. You have that credit for X amount of time, and you're going to make X amount of payment and installment until it is satisfied. And the other one is open credit. Open credit sort of apply to credit card, but a specific type of credit card. Think American Express, because those have a no preset limit. And that's also a myth when it comes to American Express card that are like the black card, where people think it's no limit. It is not no limit. It's no preset limit. There is a limit that is dictated by the economy, and it fluctuates. Of course, just because you have a black card don't mean you're going to swipe it to buy a car cash or to buy, a home. And people think, hey, usually by the time you get to have an American Express card, you have good habits of credit and you would know certain things not to do. But those are the 3 type of credit every item kind of falls in.
So are you saying that American Express is weighted differently than a regular credit card?
Yes, it is an open credit. It is an open credit and not an installment credit, because when you really think about it, the revolving credit, you could let it revolve month to month. The open American Express card, you have to pay that. It's a charge card. You have to pay it off every month. So that don't revolve. So that's an open credit.
Does it help when you said credit mix? And that's why I keep coming back to this one. So does that mean that it's helpful to have different types of credit? Or if on my credit, I'm trying to build my credit, and I'm sure there are a lot of people here that are trying to build their credit, and all I have are credit cards. I have 4 credit cards. I'm doing well with them, but all I have are credit cards. Does it help to have a different mix of types of credit?
Absolutely. Absolutely.
Okay. So what you're saying is that if I am attempting to build my credit, I should maybe definitely have a credit card to use to build credit, but take some other form of credit also, as far as the open or some sort of installment loan.
Yes, and for installment loan, you don't have to necessarily think about mortgage or even buying a car. You could literally set up a certificate of deposit at your bank, and some of them do report to the credit bureaus. A very famous one is Self Lender, where basically you could extend out to them maybe $200, a couple $100, and it's almost kind of like doing a secure card, but the money you leave it with them and it pays that loan. It's not a secure card; it's a loan, and that would be considered installment credit, and it gives you a good mix.
Like that. That's things that you may not necessarily. So okay, if I have my credit cards, I have an installment loan, so I have a good mix of credit. Is there, what other factors would go into how high my credit score can actually rise? I have a good mix. I have my installment loans. I have my credit card. I have maybe another open credit card. What else could I possibly be doing to increase my credit scores?
It is a lot of things you can
One
do
or
to
two.
increase your credit score.
I know it's a lot.
Yeah, so there's one thing that I haven't mentioned, so I mentioned this one. So age of credit is important as well. So you will hardly see, unless you know how to game the system, you will hardly see an 18-year-old walk around with an 800 credit score. Is because there's average age of credit. So if you just have a couple credit cards, maybe let's say 2 of them, and you just open them, you are below the tier of like less than 2 years. After you had your credit card with you for more than 2 years, if those are the only things you have in your credit, that puts your average credit above 2 years. When you also get above 5 years in average credit, that's another tier where you kind of unlock certain points. So here's another thing that you can do, and it's also a myth that I'm about to debunk, where people think you need to wait till you're 18 to have a credit card or some type of credit profile. That is not true. There's no age limit to have credit, to be honest. My son is 8 years old and he has a credit card. What I did is just call my bank and say, hey, I would like to add him as the authorized user. And they put him on an authorized user. Now my son is walking around with 2 credit cards that have 10 years. Matter of fact, my son average age of credit is older than he is. So by the time he turned 18, you will see him because his parents gamed the system for him with an 800 credit score.
That actually, I was going to get to that a little bit later, but since we're here, we can jump into that, because that can go both ways. I think a lot of us know that, yes, it can go both ways, because we make the jokes in our communities about, parents had the light bills. I had bad credit when I was 7, kind of thing. We make those as a joke. But on the flip side, there is the ability, as you're sharing, because I saw it recently and I was going to ask you about that to share with the community, of how your children can inherit your good credit, which is exactly the way that you just broke it down. That if you have good credit and you have this good history, that you can actually add your minor children. And when they're 18, I couldn't give you $100,000, but I gave you this 800 credit score, and it's part of your inheritance. I actually love that, and love knowing that there is actually someone actually doing it and actually seeing the benefits of it. On that same vein, if I want to compare the difference between adding an authorized user to help boost someone's credit and co-signing, can we talk about what the difference is, and possibly what the pitfalls may be, the benefits and the pitfalls may be of authorized user and co-signing?
Yes, so since we're already talking about authorized user, here's what I say, and that's my preferred way, because you get still to control it. Because like, even though I gave my son a credit card, and I tell him don't lose it, and whatever day that I ask you for it to give it to me, I mean, my son is not going anywhere right now.
Wait, you gave the card to the 8-year-old?
I gave the card to the 8-year-old because I'm trying to train him to hold on to something. And, I opened the statement, I showed him to him, I told him, hey, this is $2,000 on here, this is $500 on this one, and, it's more money that's in your piggy bank. Like, be careful. I want you to know anytime that I ask you for this credit card, you need to be able to show it to me. Just making him comfortable with it. So at the same time, anytime I could call and take him off. Now, let's say you're just trying to help a friend with being an authorized user, you could have them send the card for your friend to your house and you don't give it to them. Now they cannot really hurt you. But when you co-sign, it's a different story. If your friend decides to stop making payment and they don't want enjoying the benefit of having that car or whatever you co-sign for, it can mess you up. And then you're gonna feel bitter now because you try to help someone and they end up messing you up over. Versus if it was the other way around, you're just helping them with an authorized user, it could be like, hey, you know what? Now I'm taking you off. It's as easy as making a phone call, just like you added them on.
Does adding an authorized user negatively impact the main card holder?
Not only should you give them the card and you let them go wild. No.
Okay. So authorized.
If anything, I was just going to say, if anything, be careful about who you're going to choose to piggyback on. If that person have bad credit habit, late payment history on their score, that's also going to reflect on your score. So make sure you choose well.
So if you are intending to be added as an authorized user for someone and their history is negative, that is actually negatively impacting on your history also.
Yes.
So on the good side, if their credit history is strong, you benefit from that. But on the bad side, you actually would be impacted in the other direction if their credit is not strong.
Yes.
Okay.
So
And
here's one thing. Oh yeah,
right,
I was just going to give a little silver lining. So if that happened to you, you actually, let's say, let's say me and you added me on your credit card, and then I found out, you got into some trouble later on, and that is going to impact me. I could actually call them and say, hey, I would like to be removed. I could write to the credit bureau and request for me to be removed on that trade line because I am not the authorized, I'm not the primary person responsible for the account. So that way I don't get affected.
got
Somebody
it.
have a quick question. I think Gilbert Crispin in the chat.
Thank
Oh,
you.
yes. All right. Gil, oh, he's unmuted. Go ahead, Gil.
A quick question. So with the authorized user, so the indication is that adding an authorized user cannot hurt the main card holder as long as obviously you don't give them the card and they go crazy. But also, let's say that I have $50,000 in available credit to me. Does that decrease at all when I add an authorized user? Does that make sense? So obviously, because with credit, part of it is the amount you have as well, the amount you have access to that helps build your profile. So when I add an authorized user or two, will that affect me in that it may decrease the amount I now on paper have access to?
No, it does not.
Thank you, I appreciate that.
So we're not splitting my 50 in half, and now I have access to 25 and Gil has access to 25.
Yes, it doesn't. And one thing I could add when it comes to having an authorized user, or if you're looking for an authorized user, a lot of people may try to impress you with those high number. Hey, my credit card here is 20,000. My credit card here is $50,000 limit. That should be secondary, if anything. The primary thing that you need to know is the age of credit on that card. Make sure that it crosses those tiers. Make sure it's over 2 years, it's over 5 years. If your credit was already average age of credit 10 years, and now you add a card that's average age 2 years, you actually just diluted your average age, and that can hurt you.
That's good to know because they're putting everything together to come up with that average.
Yes.
So if I'm hearing you correctly, going back to co-signing, and I want to come back and make sure that we clearly give the community the information as far as co-signing is concerned. A lot of times I get the question, or someone is interested in purchasing a house and they pull their credit and there's this thing on there that's totally negative. And they're like, no, but I was second. I was the co-signer. It shouldn't affect me that way because it was Gil's loan. Gil was supposed to pay for the motorcycle and he didn't. I was just there to co-sign for him. So tell us a little bit more about what are you taking on when you are accepting to co-sign for someone?
Yes, so when you co-sign for someone, you are taking on joint responsibility. Whereas when you have someone that is added onto your credit as an authorized user, it's still the main person sole responsibility for the money. That's the difference in there. You cannot easily just call the phone and say, hey, I co-signed with that person and I don't want to be on there no more. It doesn't work like that. It's joint responsibility. So you really got to make sure it's a good match. It's somebody of good character and reputation before you co-sign for someone. Personally, I'm not doing it.
I was a banker before I was anything else. And I would hear the sob stories from people that I know my name was second. It wasn't mine. The motorcycle sticks out because I really remember someone had co-signed a motorcycle for someone else and they were adamant it wasn't necessarily them. And I have known from then you co-sign nothing. And I'm glad that you now have given an option if you were to want to help that individual, then perhaps we might add you as an authorized signer. Because what does it mean? And from the credit perspective, what does it mean when I need a co-signer? Can you break down for the people what it means when someone comes to you and says, hey, I'm trying to buy this house or I'm trying to buy this car and I need a co-signer? What does that mean?
It could mean a couple things, but to be very blunt, it's basically the banker telling you your situation, your financial situation is not good enough. Whether you made mistakes in the past or maybe your income is not all the way there. So, it could be a situation and you could understand where someone say, hey, you know what, it's just my income that's not there, but actually I could maintain with this payment. And then you may consider, if it's like a brother or sister, family member, say, hey, you know what, just on the income, I'm helping you, but know that there is risk. But ultimately what it means is that you're not there financially for the bank to feel like you are credit worthy to extend this amount of money to you. A lot of times, like just in a credit conversation, like when you're going to actually like rent a place, a lot of places right now, they're asking for first, last, and security. And there are certain loans that you're getting, they're asking for a lot of money down. And the reason being is if you actually kind of defaulted at some point and I got to go back after you, because they're lending you the money, they don't really know you. They're lending it with the intention that you may never pay back. So they want to secure and make sure you have some skin in the game. So when they're asking for a cosigner, it just means like you're not good enough and they want to see more.
Is there a difference between a charge card and a credit card?
Yes. The charge card, like the American Express card, that's the one that's an open credit with the no preset limit that I was mentioning. Okay. And the credit card is the revolving credit where you can actually let the amount revolve every month over if you don't have it to pay it all off.
Okay, that's really good to know. That was one from our Facebook live chat. And if you have any questions specifically, this is question and answer. I'm going to check the chat in a moment. This is question and answers. So if anything, posted on the Facebook, if you're on Facebook, and if you are on our Zoom, definitely post it on here and we will make sure to get your question in. Until then, I will continue to ask because this is the area that I love and that I'm really, really curious about the ins and the outs of. So next up, we talked about revolving credit, we talked about co-signing. Tell us a little bit about bankruptcy. I know you're not a bankruptcy attorney, so don't tell us about how bankruptcy works, but the credit side of bankruptcy. I had some debt, it got a bit over my head, I filed bankruptcy. How do I get back to the land of positive credit from bankruptcy? Is it possible?
Certainly, it is possible. One of the first thing I'll say if you're trying to get back in the game and it's early on, is to get a secure card, start establishing some new credits, because likely a lot of accounts that you might have had got added and included into that bankruptcy. So, and nobody else might want to extend any money out to you, but if you got like $200, it doesn't need to be a lot of money. You could get a secure card, and there are secure cards out there that actually do not pull credit to get you approved. So as long as you can extend out $250 for 250 credit limit, and that will report to the credit bureau, and you'll have some positive account that hasn't been affected negatively, and you could wait it out for some years. Typically within the first 2 years, it will be very, very hard to get some bankruptcy item removed of your credit. But after that, there are certain things you can do. However, I can tell you right now, it's something that that's being very difficult to deal with, because a lot of courthouses are closed and they adjusting to what's happening. So the letters that you will literally send to the the courthouse, they are not getting those letters. And so right now might not be the best time to trying to fight a bankruptcy to get it off your credit, but you could always at least get some secure credit card added onto your credit, or even, get an authorized user and start helping you in that way.
So coming out of bankruptcy, what I'm hearing is it's time you need to establish new positive lines, because a lot of things might have been wiped out of the old, but you need to start establishing new positive ones.
Or tinted. I wouldn't say, remove or anything or wiped out, but it's tinted. When they include an account into the bankruptcy, they have coding that they put on there. It might be something you don't even recognize. It might just say like, A9. You don't know what A9 is, but the machine that's factoring it recognize that A9 means that you've been involved in a bankruptcy.
Got it. Got it. Debt consolidation. What is your, from your professional standpoint, if you can break down for the people, what is debt consolidation and how it possibly impacts credit, whether for the positive or for the negative?
You know, that's actually something I mentioned in one of the blogs that I wrote on my website. So, you know, for the people that are watching, not familiar with me, the name of the company is The Oasis Firm. So if you just go on www.theoasisfirm.com, there's an article I wrote, which is what is credit repair? And there I kind of cover a little bit about debt consolidation. For me, it's not something I'm too much of a fan of, because it almost seemed like they're doing the part of the debt settlement for you, which of course, you know, kind of like credit repair, you know, you could do it yourself. But a lot of times I found out that people actually end up paying more money than they should have. And it also doesn't really help your credit because really that's not something they factor in. All they really concerned about is help you settle your debt. Let me put some information in the chat group, and I think somebody else have a question, but did I answer your question about debt consolidation?
Yes, yes, that's information that I think people need to hear, that there's a difference between debt consolidation if you have debt and actually debt management, or how these things actually impact your overall credit, because there are companies that are consolidating and they're coming together and consolidating your your debt, but it's not necessarily taking it off of your credit. It doesn't guarantee that it's actually being reported in a way that will be positive for you on your actual tax return.
Yes, and not only that, now that you mentioned tax, they could also still send you, I believe it's a 1099-C, cancellation of debt, that now you have to realize it as income on your tax return. So, I mean, personally, you can tell I have a bias. I'm not a fan of debt consolidation, especially when some people are trying to offer that service as credit repair and the consumer do not know any better.
I personally, if you're taking, I say I personally share that bias. So that's one of the reasons that I wanted to bring it up, so that we have a good conversation about it, so that a lot of times we are trying to dig ourselves out of a situation, and what appears to be a life preserver actually is a lead weight and pulls us in the other direction. So it's one of the reasons I definitely wanted debt consolidation, for that to be something to come up for us to actually have a conversation around. So I share your bias on that. Sorry, I was reading questions in the chat. So a few questions from the chat. I'm going to, Tracy, I'm going to come to you in a moment. And Gil had a question. Gil, was your question audible, or did you want to type your question?
It can be audible. I guess I wanted Mr. Sirius to just really talk also about, I know you mentioned credit utilization, but a lot of people aren't clear what that is and what the target for credit utilization should be. I know there's, you know, numbers floating around 10%, 30%, 1%, but if you could just clarify that, because I don't know that everyone quite understands.
Got you. So, and of course, what I'm about to share, there's a lot of people that might have something different to say, but I have this information from a very good source. One of the credit repair conference that's like the most expensive in the industry and very well known, I attended one last year, and that's where I got my information from about, you know, credit utilization. So with that being said, you will hear the term 30% a lot. And just to do easy math, if you have a credit card where the balance or the limit on there is $1,000, 30% on there is $300. So if you're spending more than $300, it doesn't mean it's bad, but they start to maybe, you know, not giving you as many points. They start to deduct, you know, some points from you. If it's below 30%, it is good. If it's below 10%, which is like you only spend $100 on that $1,000 limit card, it's great. It's excellent. 1% probably count just as much as 10%, or, you know, a little bit lower in that range. However, here's one bias that did explain to me based on how the computer is doing the calculation. If you have a credit card and you actually have no money on there, basically 0%, technically it's like you're not really using credit. It could be inactive. So just, you know, a little tip, if you have one of those credit cards and you don't really use it a lot, maybe we could just put something on there, some easy subscription like Tidal, maybe Netflix, so that way you keep using it and they don't end up closing it on you. But those are the range that I would recommend people stay in. But the minute you start going over 30%, you should really try to make an effort and bring it back below that.
Awesome. Thank you so much. Tracy, I don't know if it's Tracy or Tony who typing in and wants to ask the question, but if you can turn your mic on and feel free to chime in with your question.
Give him a minute.
Okay, can you hear me?
Can hear you, yep.
Okay. One of the questions that I had was about credit inquiries. Why do credit inquiries go ahead and hurt your credit when you need to do an inquiry in order to find out if you can get credit?
Great question, great question. There are different type of inquiries. There are hard inquiries, there are soft inquiries, and there are, something you could kind of call it inquiries, but it's not even an inquiry, but it's like just having a credit monitoring, to check on your credit, yourself, which is something I recommend to some people. If you're ever iffy about your credit and you want to make a big purchase, why not ask the person, hey, do you think I will qualify with this? And actually check your credit yourself before they check it. Because when you check your credit yourself, it's more than likely just a credit monitoring, method that you're using to get there. Soft inquiries, sometimes company do them a lot to see if they want to extend credit to you. One company that does it a lot of people may recognize in their credit report is Capital One, because Capital One have all type of tiers or, customers base that they cater to. They have credit card that are $100, they have credit card that are $10,000 and so on. So a lot of times they're just running those soft inquiries in the background just to see if they want to extend credit to you. Now let's talk about hard inquiries, which is the one that actually hurts you. What I would say about the hard inquiries, they don't really hurt you that much unless of course you're trying to shop for a car and then the finance manager run your credit about 20 times, 20 different places, and that could get you messed up. But that aside, they don't affect you a lot. If it's just one inquiry, after 1 year, they don't even affect you point-wise. They're just right there on your credit. After 2 years, they get removed of your credit automatically. So it's nothing to worry about. However, if you have a lot of inquiries within, like I was saying earlier, a 24-month period, let's say about 5, some company is automatic in the policy. You had 5 inquiries within the last 12 months or last 24 months, we don't want to actually deal with you. And sometimes what I use to explain it in very layman terms to some clients, like, hey, think about it like this. You in a club and there's 2-level VIP up there. There's a nice lady that is looking at you. She's interested in you. She actually want to give you her number. She just waiting for you to ask. But you down there, not in a VIP, and you walking around inquiring with some other ladies. Hey, let me get your number. Hey, let me get a dance. And you keep getting denied. And she's up there ready to give you a number, and she's seeing you getting denied and rejected from left and right. She's going to start thinking maybe something is wrong with you. So all those inquiries that you saw, on your credit report is similar to the lady looking at you getting rejected. By the time you get to that application, that mortgage broker or that, finance manager, they're looking at you like, wow, I mean, you're telling me they run your credit 20 times and you still don't have a car? Why would I give you a car? So it's always best to actually inquire first. Like, hey, does this meet the criteria you're looking for? Here's where my credit is at.
Practical application. I love to apply it to real life. I love the practical application of it. When it comes to, let me ask you, when it comes to mortgage inquiries, I've heard this a lot, and I'm glad I have you because I don't think I've ever really asked a credit person the question. One of the things that we hear about mortgage inquiries is that if I'm shopping for a mortgage it doesn't matter how many times I have my credit pulled, or is it within a certain time period? Is that a myth, or is that true? If I'm looking for a mortgage, I spoke to Nadia, I spoke to John, I spoke to this one, does it not impact me, or does it have a small impact? What's the truth behind that?
Honestly, it's common knowledge. They say it a lot, where if you apply within 15 days, some places say 30 days, you could have, let's say, 100 inquiries and it should just count as one. However, from the files that I've been seeing, it doesn't count the same. If you had a lot of inquiries, they all ding you. At least that's what I'm seeing on my end.
Okay. Well, that's good to know, because we hear that a lot, and I don't necessarily always know the answer to give to clients, and I would hate to say yes because that's what I've heard, and then we end up with major issues. We have a question from our Facebook chat. Nedra wants to know. Hey, Nedra, thanks for watching. Nedra wants to know, if you have a high student loan, 170K kind of debt, can you still achieve an 800 plus credit score? Is it possible?
Yes, I believe so.
What does that look like? What kind of moves would you have to be making in order to still be able to achieve a great score?
Keep paying your student loan on time. That's what I would say. Just keep paying your student loan on time, and also have some other credits available that you're not using. As long as you're making payment, like student loans are treated very, very differently than any type of other items, especially the government related. So it's not going to affect you as much. It's almost like having an installment type of loan. And actually, student loan or installment type of loan. Just because you have a mortgage, I mean, people have mortgage that's like $300,000 and still have, a 800 credit score because you're making your payment consistently and on time. So you just got to be on time with it. And here's a trick about student loan. 9 times out of 10, they're reporting wrong. Because if you really pay attention, anybody has student loans that ever been late on there. We're talking, of course, the ones that are related to the government. They go by their own guideline. You will never really see where they report you late for 30 days or 60 days. They jump straight to 90 days. And that itself, from a logical point of view, lets you know it is inaccurate. How is it you're telling me that in May I was on time, in June I am on time, but now that we're in July, I'm 90 days late? It just doesn't make no sense.
Gotcha. So we definitely need to be looking at the details. I had a client recently, just a few months ago actually, whose credit score on, let's say, one of the private ones that individuals pull for themselves was such. It was middle 600, 670, 680. And this was right around when COVID was starting. So I don't know if something specific was going on. And immediately we had the credit pulled somewhere towards maybe a month in from the last time she looked at it. And the score had dropped significantly, like below 620. Do you have any idea why something like that would happen? And piggyback and to connect with that, I want to say it was around the same time that student loans were being allowed to be deferred. And so supposedly you're not supposed to have it impact your credit score. Have you had that experience, or what do you think we can attribute that to?
Well, I'm not too sure, because there could be a lot of factors, but one thing that I'll say, even though they make those announcements, you still have to call to actually make accommodation that, either you want your student loan to be deferred. They don't do it automatically. So I'm not sure if she called or if she didn't call, where, they might still have reported late, because a lot of people during the pandemic are still getting late payment because some of them were under their impression, since it was announced, we have a pandemic, nobody will report them late. But you literally have to get on the phone and work out those accommodations. They don't just give it out to everybody. One thing I can say that may be able to help your friend, and please, if you use this for something different, it's not up to me. I mean, I'm just saying the knowledge. You take it how you want. So just like we have.
You're not responsible for what they do with the knowledge.
Exactly. So just like we have coronavirus, we're in South Florida, we've seen a lot of hurricane. Those are all natural disaster, quote unquote. That's how they at least coded in terms of credit. So your friend can say, hey, such and such, whoever the creditor is or the student loan person, hey, I'm heavily impacted by COVID. I'm not working, whatever her story is, how she's affected and she's not able to make those obligations. And they will code her that particular account, not the entire credit report, just that account. They will code it with natural disaster, will not be taken into factor into the score. Now, here's where it is best. I know from a very good source that the system is not able to dictate. Let's say, you had late payments from last year, and then now during COVID, you have some late payments and you request for them to put a natural disaster on there. That code will actually X out even the late payment that wasn't during COVID. So anybody right now that's dealing with some late payment, it doesn't matter what it is, whether it be a car, mortgage, when it was or whatever, feel free, do some research, go on FEMA.org or FEMA.gov. I don't know the website on top of my head, and search natural disaster. And if you can find a natural disaster that happened around the time where you had the late payment, and you call the company, you tell them this is because of that natural disaster that I had a late payment, and you get that account coded, your credit will get better.
That we live in hurricane country. So we have, at least those of us who are in South Florida watching, we live in hurricane country. So we are the alley for natural disasters all the time. That's really good information to have. We're going to continue, but I want to share with you, you have something that you wanted to offer to our participants, our audience, the Avancé Ensemble audience, the Avancé Ensemble family. Before he offers that, I want to remind you, if you're watching this video, please like our page. We do things like this all the time, especially during this time. We're dedicated to bringing the best information possible to the community at large. While we might be a Haitian millennial group, we are committed to bringing information to all of our community at large, because when all of us do better, all of us do better. So we want to avancer ensemble. We want to rise together. So please go and, whether you are actually Haitian or Haitian allies, Haitian supporter, if you like Banan Pese or Diri Kole, and if you know what those words mean, go and like our Avancé Ensemble page. And we'll keep the information flowing. And with that, our guest, before we move forward, told me that he has a little treat for our community. Carl, can you tell us a little?
Yes, so the treat that I have for you guys, I'm so thankful to be on that platform. When me and Amara actually got connected, the person that connected us actually asked, hey, have you ever heard of Avancé Ensemble? And I'm like, no, I've never heard of it, but this is a very common phrase. It's literally like a mindset of the Haitian people. We know we have strength in numbers. We come together to make things happen. So I'm very interested. I'm very intrigued. And, come to find out, and, we got to talk, me and Amara, and I know what we're doing. And I'm like, you know what? I want to bring a treat for the people. And here's what I have. So definitely you would have to know how to spell it. So here's the trick. You got to make sure you go on a page. Avancé Ensemble, you spell it AVANSE, and then Ensemble is ANSANM. But all you need to use is the word avancé. And all you need to do for the word avancé is just text it to the number I'm about to give you. And you'll be offered an opportunity to sort of enter your information. And from there, whenever we take care of you, we'll give you $100 off your enrollment fee. And the keyword is avancé. So if you're here, make sure you share it with all your Haitian friends. And some of them, don't speak Creole, make sure you spell it out for them. AVANSE, and just text that word to no quotation around it, just the word AVANSE to the number 954-678-5394. So the number again is 954-678-5394, and we'll take it from there, and we'll recognize and be able to say, hey, this is where you come from, and we'll point your enrollment. We'll take $100 off the enrollment fee.
And like he said, you do not have to be Haitian or of Haitian descent. Haitian affiliation is sufficient. Avancé Ensemble affiliation is sufficient. I'm putting it into the Zoom chat right now. Gil, if you can pop it into the Facebook chat. And this code will be good for $100 off of their services through the end of the month. So even if you catch this on the live stream, on the stream later, if it is not the end of July 2020, just in case you're watching this next year, if it's not the end of July 2020, you still have the opportunity to use this code and receive a discount off of their services, which I definitely encourage you to take advantage of. So thank you so much for that, Carl. And we're going to continue just for a little while longer. We usually try to go a little over an hour, and we're just about there now. If there's anyone, oh, actually Tracy in our chat had a specific question. If anyone on our Zoom has any specific questions for us, please just let me know in the chat or raise your hand and we'll make sure to get to you. But right now, Tracy, if you can unmute to go ahead and ask our expert your question.
Okay, this question is going to be kind of about credit utilization. And I'm going to use you, Amarel, as my example.
Okay.
Amarel has gone and she has very good credit and she has a large amount of utilization available to her. Why is it when we go and we spend $1,000, $2,000, our credit score rockets downhill?
I mean, it may be, let's say.
Let me give you a number. Let's say that Amarel had a credit score of 820. And let's go ahead and say that Amarel was using 1% utilization. Now she decides that she has to go and do a car repair. She goes and she puts $3,000 on her credit card. And she decides, you know what, I'm just going to go ahead and pay that over the next couple of months. Her 820 would probably go all the way down to below 800, if not further, because of the use of it. You have this, but then if you use it, it's like you get penalized.
Yes, because it counts for about 30% of your score. So when you do the math, that's about 165 points. So if you max out on a card or you get close to using that credit.
No, but what I'm saying is that where I've got $100,000 available to me that I have not used, and I'm only using 1% of the 100,000. Now, my score is 820, so 820, 830, 840. I'm way up there, and I've got $100,000 worth of utilization. And I go and I put $3,000 on a credit card, and all of a sudden now the credit goes below 800. You at 770. You at 750. So it's like they want you to go ahead and build all this, but then they punish you to use it.
Understandable. So now let's make a distinction. Is that $100,000 limit on one card or all across her credit utilization?
All across the board. Because they go ahead and they say utilization. They don't say utilization on one card. They say utilization.
Understandable. So let me give you an actual example from a client. So client has two credit cards. One of them is $2,500 limit. The other one is, I believe it was about $500 limit. Yeah, so one is $500 limit and the other one is $2,500 limit. So just giving you the ballpark. So in total, she had $3,000 credit utilization. I believe she owed about, let's say, $300, give or take, on that $500 card. And then she owed about, let's say, I think maybe about $1,000 on that $2,500 card. So when you do the math, that $1,000 on the $2,500 card, that represents 40%. But that $300 in change on that $500 card, that represents 70%. So the points that she's losing on is not necessarily all across the board. It's from that specific card that was $500. So that kind of was like, you know what? I think the $1,000 that I'm using on this $2,500 card is too high. I'm gonna go ahead and pay it off. And I'm like, what are you thinking about doing? It's like, well, I could pay it off, $500 and, kind of like bring it a little lower. I'm like, you know what? Here's what's going to be better for you. Instead of spending $500 to bring that $1,000 to $500, I want you to take $300 out of it and pay the card that is actually $500 limit, so you could bring the utilization down on that specific card, and her credit shot up. So you have to also manage it, not just collectively, but individually as well.
Got you. So we have another question. How important in the Zoom chat, how important is it to know your credit cards or to know when your credit cards or other credits report to the Bureau? How important is it to know the date that those are being reported?
I believe it is very important, especially if you're using your card frequently. Like, let's say, you know, I knew that my card report on the 24th. And because when you actually like get your credit report, it is a snapshot of a time and place. It is not a living document. It's not like, hey, if I put my credit right now, like that's what it is right now. It is actually what it was when it reported. So if you know that date, you're able to maybe play around the system. Just know, hey, you know, my card is going to report on the 24th. So tomorrow, let me make sure I make a payment. You know, even if I have to borrow money for somebody, hey, you know what? Let me borrow $200, make that payment. I'll give it back to you Monday. Monday, you could probably buy something, return it, and give that person the money back. But when they take that snapshot on the 24th, they're going to realize that your credit was much lower than if you didn't do that. So it's important to know those days.
So there are ways. It's a matter of knowing how, if you're willing to put in the time and the effort, it's a matter of knowing how to maneuver in order to keep your scores up, in order to get your scores up. And our advice from this desk and from everything that we've been talking about is not focusing simply on the minimum, like what do I absolutely need to do to just kind of thread. It's really these tips are to teach us a way of life as far as making choices that are specifically geared towards keeping us in the best financial position, so that you don't bat an eye when you put down your card for something, or you don't have to worry about, am I going to be able to do this? These are the skills that we want us to cultivate in order to continue to build within the community. We have a question from the Facebook Live. Jason Beasley wants to know, or Besley wants to know, do all lenders look at your credit report the same? For example, do mortgage lenders look at your report the same as for car loan lenders?
No. And here's what I want to say to expand on that. Mortgage, typically, and it's something we didn't cover too much on, there are different type of credit scoring algorithm being used. I'm sure a lot of people heard the word FICO before. Hey, what's your FICO score? What's your FICO score? Those are very, very, I would say, they somewhat have a monopoly on the mortgage market. So 9 times out of 10, you go trying to buy a mortgage, they're going to be pulling your FICO score. Where a lot of times when you're trying to either get a credit card or a car, they're going to approach your vintage score. Vintage score are way more inclusive than FICO score, even though FICO score been around for way longer than vintage score. Vintage score might actually be just 10 years old, but they actually have more credit profile in the database than FICO because they are that much more inclusive. So no, definitely they are not looking at it the same. But one thing I can tell you, even though FICO is very well known for mortgage product, they actually have different scores from different type of product. So when you're trying to get insurance, whether it be insurance for a car or different type of insurance, and they checking your financial background, they have a score for that go up to 900. You're trying to buy a car, they have an auto score that's specifically for auto score that go up to 900. So if you ever hear somebody say, hey, my credit score is 867, they may not be lying to you because you think it only goes up to 850. It depends on which credit score they're talking about. I hope that answered it for Jason.
Appreciate it. So I have 2 more, unless we have something from the live, from either the live or the chat. I have 2 more that I really want to get to. And this was asked earlier in the chat, but I wanted to circle back around to it. Utilities. So I have heard from various people and actually some credit professionals that there are ways that your utilities, being your rent, being your utilities, maybe light, water, these things can actually be used towards increasing credit score. Can you speak to that?
Yes, that is true. That is true. I'm going to give you a lot on this, so bear with me. So
Okay.
when it comes to utilities, when it comes to rent, cell phone bill, you able to do one thing that's very popular right now. It's called Experian Boost, where they actually factor it, they go into your account. I'm not saying whether I'm a fan of it or not, but you might be concerned about it for some privacy issues. So maybe that's something you might not want to do. But one thing I would say about Experian Boost, if you do it, you don't like it, you could take it off. So no foul, no harm. There is also companies that centered around, let's say, renting, where they want to report your rent history. You have rent reporters, you have Rental Karma. You just kind of reach out to them.
It really will be reported to the three majors. This is something that happens.
Yes, definitely ask them questions, because it costs for them to report it to the credit bureau. So ask them questions. Will you report to 3 credit bureau, or will you report to just 2 credit bureau, or even 1? So, do your due diligence and ask them. But rent reporters, Rental Karma, they help you on that. So with that said, I have some very good sources and good inside information. I just mentioned how an Experian Boost, if it doesn't work for you, you can go ahead and take it off, and it's really never really affecting you negatively. It's either it helps you or it don't help you, but it's not going to affect you negatively. So that's with Experian. The people that were sort of working out that deal with Experian, well, I don't want to say too much of what happened, but long story short, there's another credit bureau that's trying to bring out their own product similar to Experian Boost. They might advertise it as Experian Boost. However, if you use that, you won't be able to take it off. And if it's negative, like if the person have late payment and whatsoever, like, let's say, a lot of us sometimes we pay our phone bill late, or we're just paying like what's due right now and let it roll over. If you do that next one, it's actually going to affect you pretty badly, because that would be like a rolling 30. And what a rolling 30 is, to explain in a layman term and not go too far off, is let's say your car payment is $407. And then for some reason, one month you end up paying $400, but you didn't pay the $7. So for some reason, next month, when you make the payment and it's $407, you thinking that you're on time. But what actually happened is that you were late last month because you were short $7. Not this month payment, they're going to take $7 out of it to make you current for last month, and then $400 applied to this month, and you still behind $7, and that rolling 30 just keep going. And when you look at your credit report payment history, it's just going to be 30 days late, 30 days late, 30 days late, one after one of those. So just be very careful about those.
You mentioned that there are companies that appear to be Experian Boost. How can the layman tell the difference if they're still calling it Experian Boost?
No, they will not call it Experian Boost. They have the name. I know the name, but I'm not allowed to say the name because it's not on the market.
Understood. You can tell me offline.
Yeah, I can tell you offline, but it didn't come from me.
Gotcha. Okay. So my final question, if I'm going to check the chat again, and Gil has a question. Great. My next question is, there are a lot of, especially now that we're talking about wealth building, we're talking about people with a certain amount of at least knowledge and know-how. And so I have friends, and try to be that person myself, who does not carry a balance. Is there, and I know the positive side of it. I know the positive side of you utilize, let's say I have a $10,000 credit card. I pay all of my bills every month on that card, and then I pay it off. And I'm definitely building as far as points are concerned. But I think I heard from someone that it doesn't necessarily give me the positive credit impact that I need if I'm paying everything down to absolute zero. Are you able to speak to that?
Yes. Basically what it is almost like you're not using any credit. Like, because the thing is they're trying to figure out is, can you manage credit? If you're paying it every month, and remember, they take a snapshot. So if every month they take a snapshot, it's at $0, it's almost as if you never use that card, and you really risking them closing it on you. Because remember, it's so many people here in the United States, those decisions are not made by human beings. It's literally algorithm in the background that's making it happen. So after so many times of the algorithm running and seeing that every month you have zero on this card, you have zero on this card, they might be like, you know what, let's actually give this type of line of credit to somebody that actually needs to use it because you're not using it. So that's why I recommend, if you have a card, don't have it at $0 forever. If anything, put something like Tidal on there, you know, maybe once or twice when you go out, put gas on there, and, you know, pay a certain amount. Just keep it below 10%, but that 0%, it could end up just, you know, penalizing you to where the card end up getting closed. And when the card get closed, you actually losing part of your credit utilization, because whatever credit utilization that was available to you, whether it was like $1,000, now it brings it down to $0. If you only had 2 cards and each of them had $1,000 credit limit on there, and they end up closing one, let's say you owe $500 on one of those cards and the other one was $0. Now you have 25%. If they close one of those cards, now your credit utilization just jumped from 25% over 30% to 50%.
Mm.
So always keep a
So
small low balance.
So it's making a solid plan for it. Gil, I'm going to come to your question in just a real quick second, because I missed this question in the chat. For the natural disaster tip, should we be contacting the lender or the credit bureau if we were in a natural disaster area and we want to have our report dinged as such, marked as such?
First, the first people to always contact are the credit bureaus, but it wouldn't hurt to also contact the credit lender if you want.
Okay.
So just to give you a little tip how it works on the background. So you establish a basis when you, I don't want to say dispute, like even though they label every letters challenges that goes out there as dispute, I have my own method. It's called the CDE method. Like you can't really look it up online. It's me that made it up internally. But my first dispute is a challenge. So I like to
property. It's your intellectual property.
Yes, yes. And I'm actually writing a book about it. So when I write it, I'll be putting it out and, you know, probably reach out to some people so that way you can kind of know what it's about. So the challenge, you always want to establish that with the credit bureau. If ever there's room for you to sue, you could always, you know, reply to say, hey, you know, I challenge this with the bureau. When you challenge the bureaus don't even do too much of, I say, you know, conduct an investigation. What they do is that they have a intranet system, not an internet system where it's visible by everybody, but an intranet system where it's proprietary to them. And that's how they communicate with everybody. And it's all pretty much automated. So when you dispute something with them or you challenge something with them, they send a signal out or message out to the creditors. And the creditor are the one that have to conduct the investigation and sort of, you know, get back to you. So the same way, when you start the dispute with them, they go that way. By law, if you were to contact the lender at first, they are supposed to also notify the credit bureau. Do they do it all the time? Of course not. But always go with the credit bureau first, but it wouldn't hurt to go with both of them.
Gotcha. Gil, going with Crispin. Gil, go ahead with your question.
Okay, thank you so much, Amro. So this is almost a twofold question. You know, in our community, we have a lot of business owners, a lot of entrepreneurs, people building things. So if you could talk a little bit about personal credit and how it affects your business's credit. And then the second component is, you know, even getting business credit cards, because a lot of business credit cards don't necessarily report to credit agencies. So is that a benefit for people? Is it a pitfall? So if you could talk a little bit about that. Thank you.
Great questions.
Great question, great question. And business credit and personal credit, it's two different worlds. Although, you know, some people have used the personal credit to kind of start their business and kind of get it out there. But ultimately, let's put it this way. If, let's say I go to Apple and I'm applying for a credit card, you know, the Barclays credit card on my personal, and I'm like, you know what, I would like to buy some stuff, kids about to come, school's about to open. I just need some stuff to kind of cope with this COVID situation we're dealing with. It's very easy for them to say, you know what, you might just need $2,000 to $5,000 because how much stuff you're going to buy personally for you and your kid. However, if you apply as a business, don't be surprised if they extend $25,000, $30,000 to you because you might have employees where you need more of those stuff. And there is business credit and there's also personal credit. Yes, if you get business credit that are not attached to your social, they will not report on your personal credit report. And where they report, you will actually get a free account. It's called Duns and Bradstreet. So you could get a Duns and Bradstreet number as well. There's NAV. You could get, get connected with NAV so they could report on your business credit. Also, Equifax has their own Equifax business credit report, and Experience also have the Experience business credit report. So those are some of the things to be mindful of. And if you're just starting as an entrepreneur, definitely get your Duns and Bradstreet for free. And there are a couple of things that they go through. And I might even put it in a chat group because I believe, actually, no, that was something that I did live and I didn't record it. But there are 9 categories you want to make sure that you check out for people to be able to extend money to you and feel like you are credit worthy enough where it's not attached to your social. You got to be registered. You got to have an actual business address. It cannot be in a residential area. It cannot be a post office box, but here's how you could get around this part. You could get a UPS box because the UPS PO box are actually street addresses and they will come up as business. So this is how you get done. Also, if you get your business listed in a 411 listing, that adds more credibility. If your email address is you actually have a website and a domain, and for me, like my email address is cserious@theoasisfirm.com. This is going to give me a better chance to get business credit if I put theoasisfirm@gmail.com. So those are the things. Really be mindful and conscious about your presentation and to build your credibility if you're going to go out there for business credit.
So Gil is one of our board members with Avancé Ensemble. And Gil, this really sounds like an event that we need to do. Just talking to business owners, like all of the stuff that you're sharing is stuff that I'm always thinking about when it comes to our entrepreneurs and our small businesses, giving some of those nuggets that can help us start to kind of really, really grow. A lot of in my other world, I actually am a tax preparer. And a lot of my business clients who are super small businesses were not able to get some of this disaster relief funds because they didn't check all the boxes. And there are ways that they can check the boxes to make sure that we are getting some of the things. So this may be something coming to you in the community from Avancé Ensemble in the near future. We'll definitely have Carl to share some more details with us. Gil, was there a second part of that question or was that all of it?
Oh, I think he touched on it. I guess the only thing I wanted, Carl, he touched on something earlier. Carl, you touched on the bonds. And I think that would be really helpful to a lot of our listeners and to our Avancé Ensemble community in terms of a way to build credit. If they don't, it's kind of another form of a secured credit card, but it's a bond. If you could touch on that and the specifics of the, I guess, bank or lending institution you mentioned, I think that'd be really helpful.
Yes, definitely. I believe it was when I mentioned a certificate of deposit. There was a company called Self Lender. They rebranded themselves as Self. There is, I actually met one of the CEO that worked on that project with Self Lender. They also have a bank in Texas that also do it. And I'm trying to remember the name, but pretty much what it is a certificate of deposit. You just say, hey, here's my money. You will have it for 12 months. Whether it be $1,000, they'll put interest on there. And what they're doing is basically just creating you a separate account. Kind of like you have a checking or savings. Now you will have a certificate of deposit with your bank. And really you could dictate that, hey, every month automatically money comes from that money that you actually, you know, let them have, like let them hold as a certificate of deposit to pay the, to basically pay the account where they extend you out the money. Or basically, let me put it this way. Let's say they extend out to you $1,000. If it's not a loan, like they extend it as part of a loan, and then you have your certificate of deposit that you have to pay back, basically. You could actually have that money pay the certificate of deposit, if it making sense. Like that same money, it's just like a play. It's like you borrowing money from yourself.
Mm. And it's being reported.
Not all of them do it. Not all of them do it. So that's
Make sure
also
it's being
another thing.
reported if that's what you're trying to accomplish. Make sure that it's being reported.
Yeah, so Self-Lender, they have a program that does it. I don't know if other people do it. Personally, I had a Navy Federal certificate of deposit, and it did report. So just, you know, make sure you're picking out like a bigger bank, because here's the thing. For those creditors to report on a credit bureau, they pay for that. So not everybody may have the same financial capacity to help you in that regards. If you go over to local bank, they might only report just to Equifax or none of them. So just ask the question, do you report to all three credit bureau? One thing I wanted to mention as we were talking, I actually did a presentation on business credit. If you guys want, I don't know if you have files, I could give it to you, Amara. I could always like email it to you. You could put it in a group for people to download to see what are the 9 things they need to check to make sure the credibility is there as a business.
Awesome, awesome. No, that will definitely come in handy. Now, one more time before we wrap up, I just want you to share again the treat that you brought for us. For those that might have joined us just a little bit late, if I'm looking down at our Facebook feed to catch up on the comments and the questions. If you can share with us one more time, we're going to put it in. It's in the chat. I did put it in the chat. So if you're in the Zoom, and we've already put it up on the Facebook. So if you are watching this afterwards on Facebook, you will find those details. But tell us just one more time what you have provided for our community through the end of the month of July 2020.
Yeah, so all the way to the end of the month, you can get $100 off your enrollment fee simply by texting the word AVANCE, AVANCE, to the number 954-678-5394. And we'll recognize you from there. We have pretty good technology, and we'll be able to say, hey, you know, we know where you come from. And whenever we do your free credit review, and that's what we offer to everybody as far as like the free credit review. Everyone get a free credit review. It's only if you want to enroll into the program that you have to pay. So, you know, even if you just want a free credit review, go ahead, send it in. You won't have to sign up. Anybody that I have ever dealt with me will tell you, I'm not one of those pressure sales. I'm also educate. And what I like to tell people from the get-go, having a free credit review with me, it's only 3 things that can happen. First thing being, you find so much value out of conversation. You say, you know what, Carl, thank you so much for all this information. I'm just gonna do this myself. And I'm gonna be like, hey, good to go. I appreciate I could be of value. If anything, do you think it's fair? You could give me a review. And if you could give me a review testimonial, I think that's fair. Most people usually agree. Second thing that can happen is that you find so much value, be like, wow, this guy's know a lot. I think he can fix my problem. However, money could be an issue. Timing may be wrong. Whatever the issue is, I want people to be comfortable telling me no. And I tell people, hey, tell me no. It's fine. We will proceed at a later time, or maybe never, but feel comfortable to tell me no. And last but not least, the third thing that usually happen more often than not is the person start to feel what they're trying to achieve and the type of work that I do aligns with them, and they feel the synergy and they want to move forward. And even then, I tell them, hey, I want you to remember, because I want to empower you to know when we finish this conversation, by the time we circle around to the 3 options, it'll be up to you to choose, because we're not looking to just, you know, pressure sell down your throat. So don't feel like you would have to sign up just because you get a free credit review, but ultimately, definitely take advantage, text in your information. The keyword is AVANCE, AVANCE. AVANSE to the number 954-678-5394 for $100 of the registration for the services to get started with Oasis Firm. You on mute. You are on mute, Amara.
I am on mute. All right. Sorry about that. Thank you so much, Carl, for your time, for the nuggets that you've brought to us. I know that I'm grateful, and I definitely hope that the Ava community has definitely is definitely walking away just a little better now, with a little bit more knowledge than we were when we started. So for the rest of us that are out there, whether you're on the Zoom or on the Facebook Live, please share your tips. If there are things that have worked for you, tricks and tips that have helped you to build your credit and it helps you to manage your credit. Sometimes we need tricks in order to combat our own personal shortcomings when it comes to credit planning. So I'll share real quick. Actually, there's two that I really want to share real quick. One of the things that I did that really, I told you guys I was in the 500s after college and all of those other things, other parts of life, but other parts that actually have been very beneficial to me. One of the things that I did was I set all of my credit cards on auto pay. Now, I know sometimes we're sensitive about auto pay because if the money's going to be there or not. I set them on auto pay for the minimum, because nothing is worse than getting dinged for a 30 on a $25 minimum payment. So although I will go back and actually pay more or pay off and do that on a monthly basis, but the trick of setting my credit cards up on minimum payments, I have not seen a late credit card payment in a gajillion years, and that has really helped with my score. Another one, you mentioned Experian Boost. This is the realtor in me, just from some information that I acquired talking to various mortgage people. It's a great thing to help with boosting your score, but keep in mind, everything that you add with Experian Boost becomes part of your debt to income. So be mindful of that. If your numbers are really close, if the amount of money that I earn and the amount of debt that I have are really close, now I've just added my credit card, I've just added my phone bill and my light bill and those things, whereas normally they're not counted in debt to income. If I add them to my credit report, they are now counted as debt to income. So just be mindful of that. If you're going to add your rent, which is a positive one, because that rent, when you're buying a house, we're going to cut that off anyway. So if the rent is on there, it may not hurt as much. But just little tips from my experience. You may have some tips from your own experience, your own life experience that can benefit the community. Please go onto our Facebook, share it in the chat. We do go back and we look at the chat, even of the comments, even after the live has gone off, and other people come. So therefore, we really, really appreciate your time tonight, both those that have come on the Zoom and those that have shared their time with us. Next week, meet us back here at 7 p.m. And next week, this was 4 parts. So we're doing our last part next week. And next week, show me the money. Show me what to do with it. Now we've talked about the debt. We've talked about budgeting. Now, let's say I'm on a good foot. Show me what to do with it. So we're bringing in an expert to share with us, and we're going to talk about investing. We're going to talk about retirement planning. You are never too young to start retirement planning. If I am blessed enough to live to the age of retirement, I'm going to wish that I had started as early as possible. So we want to give you some of the tools for that. And we're going to talk about asset protection, because if we're wealth building, that means we're going to grow our assets, and we're going to talk about some ways for asset protection. So please come back, bring a friend, share this live, share the Facebook, and definitely solicit, go out and actually meet our guests that have so graciously shared of their time with us. So until then, Ava Sayasam thanks you, and we look forward to next time. Thank you so much, guys. Good night.
Yeah. Good night, guys.